Welcome back to the Adulting is Easy podcast. This is your host, Lauren, and I have a special episode for you today. I recently joined my friend Rajat on his YouTube channel to discuss real estate versus Bitcoin. As you can imagine, I'm the one lobbying for real estate and he lobbies for Bitcoin. I hope you enjoy this conversation.
I had a conversation with my friend Lauren from Adulting is Easy. You can find her on Twitter and on YouTube. We talked about real estate versus Bitcoin. I hope you enjoy the conversation. Hey, Lauren, we've known each other for a little while. I think we first met when we were sharing each other's content on Twitter. Back then, I had no idea about Bitcoin. I knew nothing. I'm sure you may have been in the same position. But now, I think over time, we've kind of changed. What's your I guess level of knowledge with Bitcoin, just so my audience knows who they're listening to.
Yeah, so my name is Lauren Keene Almond. I'm based in the Tampa Bay area of Florida. I am super passionate about personal finance. Over the years, I have really gotten into real estate primarily and stocks and a teeny bit of crypto. But as someone who has a personal finance podcast, which I do, called Adulting is Easy, I always feel like it's my responsibility to my audience to understand, to at least have a very high level understanding of all kind of the different areas. And of course, just in my personal life, I'm going to get questions about these things. I'm going to get questions about, hey, Lauren, should I flip houses? Hey, Lauren, where should I put my emergency fund? Hey, Lauren, what should I do? Have you heard about crypto? Have you heard about Cardano? Have you heard about Ethereum? What's up with Dogecoin? Like, did you get rich on that, Lauren? So for all of those reasons, I just started researching a little bit. I've had a couple of crypto conversations on Adulting is Easy. I've read the Bitcoin Standard and done some of those things. And I think the best way to understand this stuff is to get a little bit of skin in the game. So I bought just a very small amount of Ethereum and Bitcoin through Webull a couple years ago. And it literally like $1,000 just so that I was watching it a little bit and understood it a little bit more. But yeah, just very high level understanding. And I'm definitely not going to be I'm not really a maximalist in anything. Like my husband has an engineering firm. We have stocks, we have real estate. We're very, in a lot of ways, diversified more than a lot of people are in the space. And it doesn't get you as many clicks if you're not like a crazy maximalist in any one thing or the other. But yeah, I basically have a very high level understanding of it and the technology and blockchain. could not tell you about anything really other than Bitcoin when it comes to crypto. I'm kind of aware of the other ones and, some of the smart contracts and things like that with Ethereum that I've looked up in that use case. But in general, I'm pretty novice when it comes to this side of personal finance.
That's perfectly fine. I think that's where everybody starts. At a point, I did my CFA. I did all three exams, one of the most difficult exams in the world. But I mean, I had no clue of how money worked. Right. So all that knowledge was just built on a foundation that we would continue using US dollars forever.
Absolutely.
And I think that's the problem. Do you understand the problem with US dollars? I think I'm sure you do. What could you explain the problem with the US dollar?
Well, what I recall about the Bitcoin Standard, and I have a finance degree from the University of Florida. It's been a while since I did that. I got a graduate certificate in personal financial planning from Boston University in 2021. And all through there, as you know, it doesn't tell you a lot about the history of currency. It doesn't really explain to you much about the supply of money and how money gets its value. And it's like anything. I guess if you want to take a real estate example, it's like the house has value because somebody wants to buy it. Money has value because we can be taxed on it, we can be paid in it, and we can trade it for goods and services that we want to buy, right? That's the general idea of money. But what made a lot of sense when I read the Bitcoin Standard, for example, which I know is very entry level, but like it used to be tied to something. It used to be tied to gold, right? A precious metal, something that is very scarce, but also kind of hard to store, kind of hard to mine and expensive and all of those things. But it was tied to something. I believe it was, I don't know, World War II or maybe the Depression era, somewhere where we went away. Maybe it was after that. Was it after that? You can tell me. Where we went away from the gold standard and then it was just sort of supported by its own self. And that's the scary part, I think, is it really is kind of a fake thing. I mean, it's not quite as fake as monopoly money, but basically because we can be taxed in it and because of the US government and the power that we have in the world, the dollar has value. That's my very basic understanding of it.
Yeah, that's essentially it. I mean, in 1933, there was a Executive Order 6102, where the U.S. government essentially confiscated everybody's gold, and if they were caught having gold, then they could get fined. They could be charged something like $10,000, which back then was a lot of money. They could go to jail for life just because they're going against the government, and that was, I think, the first step towards just stealing people's gold. And at that point, the way that I see it, there was no need to invest. I mean, you could invest if you wanted to, let's say, take a risk and increase your purchasing power for the long term, but otherwise, you're just holding gold. You're just saving in gold, and you're assuming that, let's say, you save a certain amount of money today, the value of that money will be retained 10, 20, 50, 100 years into the future. And that seems to have happened, right? Because back then, I'm not sure if you've heard of this, but in general, you could buy a men's suit back then. You could buy a men's suit today with 1 ounce of gold. And that's been the case. Even as technology improves, of course, technology improvement seems like prices should come down, but it seems like at the same time, gold's production is also increasing, meaning that prices don't actually come down, they just stay stable. So gold is the real judge of inflation, I would say. If we're producing more gold, we're adding a little bit to the economy and that inflation is happening. But over time, prices are staying consistent, which I think is the way it should be. But then in 1971, so in 1933, only the US citizens were impacted by this. But then in 1971, the US government basically took everybody's gold. Over time, they took everybody's gold. Over the next 40 years, because of the Bretton Woods Agreement, they took everybody's gold. They kept it in their vaults. And in 1971, they essentially defaulted on their loan to all of these other countries. All these other countries had loaned them their gold for US dollars, and they defaulted, right? And then from what I know from the numbers that I've seen, house prices have gone up, stock prices have gone up because people need a new way to save. They can no longer save in dollars, and that was the problem. In my perspective, that's the problem. Any thoughts on that?
Yeah, my first thought is I understand why we went away from the gold standard, because if banks were transacting with each other in large and large amounts, you could get to the point where you have to like ship somebody a bunch of gold. And that is very cumbersome. So in a lot of ways, like the logistics of moving gold, I understand that. And then the cost of mining it. So I understand going away from it. But this idea that, basically what you're saying is, it sounds like we had to transition from saving to investing, because you could just save gold. You could just have like a pile of gold, or I guess bullion or whatever, put it in your safe, bury it in your backyard. And it was fine because, like you said, it was going to hold its purchasing power because you could buy the same amount of stuff with it, the same things with it at all times. And then now this idea that if you hold on to forget gold, if you bury like $10,000, bury like a few stacks in your backyard, you dig that back up, it is not going to have the value that it did have. And so because of that, then everybody's taking all of their money and they're investing in these different assets. And because of the laws of supply and demand, that's driving their prices up.
Yeah, exactly. So as more and more dollars keep adding to the economy, keep getting added to the economy, as the U.S. government borrows more dollars, as the Federal Reserve prints more dollars, more and more dollars are chasing the same number of goods. And then on top of that, like with government spending, what they're doing is they're competing with companies for labor. So let's say they keep taking labor resources out of the market, they keep adding it to their own, their own jobs. They control more people, they have more people reliant on them, and they can only do this because they can print as much money as they want to, right? On a gold standard, they wouldn't be able to. They'd find ways to cut expenses wherever they could.
Yeah.
At least that's what a rational government would do. But in this case, not happening because they have that
been
ability
the hardest
to keep
thing.
Printing.
My sister is 21 years old, and I don't think that she can remember. There's no way, because not in her lifetime have we really had a low deficit. I mean, when we were kids, I mean, what was it? At most like $1 trillion? I don't know. I think we're similarly aged. I'm 35. It was like $1 trillion. I mean, that would be an absurd idea to somebody that's 21 years old, that we used to not have this huge deficit And the problem with where interest rates are now is they're going up. So the greater percentage of our budget has to go to just doing our debt service, just paying the interest on all of our loans. And so we're going to be at a point where we're taking more loans just to pay the interest on our other loans. And I truly, I'm not an economist. I've taken a couple of, a couple of macro and microeconomics. I got 1B in college, by the way, and it was macroeconomics. So it was a B plus, but I'm probably not qualified on this. But it's like, just it seems like there's a problem, and I don't understand why everybody can continue to act like it's not. Like why is it okay now? Well, my dad says, think of it like a balance sheet, a statement of net worth. My dad's like, yeah, we've got this much debt, but what does the other side of the balance sheet look like? And that's fair. I do that in my own life, right? Let's say, just for round numbers, let's pretend my net worth is $3 million. So let's pretend that my assets are between 5 and 6, and I've got $2 million worth of loans. I am comfortable in my personal life. Again, these are sort of close, but kind of made up numbers. I'm comfortable with those numbers. I am comfortable with $5-6 million in assets and $2 million in debt, and the difference is my net worth. So that is an interesting way to think about it. So my dad, boomer that he is, doesn't seem to be super concerned about all of that. And I don't know what the answer. I don't know what the answer. Like, what is that other side of the balance sheet? If the other side of the balance sheet is like $100 trillion, then maybe 30 trillion in debt is okay. I don't know.
I think the problem here is that, I mean, you have a certain amount of debt, but the problem here is that if you lose the ability to service that debt, then you essentially can lose everything.
You can lose it, exactly.
Right? That's the problem. So with the US, for example, have you seen the US debt clock by any chance, the website?
Yeah, I've seen it. I mean,
Yeah,
it just
great.
Yeah, it's just ticking. It's like ticking like a clock, but it's just going up and up. And it says doesn't it say like per person what it is too? And it's like, oh man, that's my share of the US debt. That's really horrifying when you see it.
It's scary because the people who aren't even born yet are the ones who are going to pay for it.
And I don't even think I can't say this enough. It hasn't always been like this. I mean, in the history of the United States government, this is a very new thing that is happening, having this much debt.
Yeah, and I think people assume that, we're never going to pay it, but we will, and we'll pay it with a lower standard of living.
Right? Yeah, I mean, how are we going to do it? I mean, I guess an argument could be made that if we can keep the economy humming on such a high level that we can keep taxes where they're at, but because there's more participation maybe in the labor force, or maybe people are making more, thus paying more taxes, maybe we can generate enough taxes. But I just don't see how we can pay that off without taking more taxes. I mean, I guess there's this argument for tariffs, but I just don't know how well those really work. I mean, you need to ask these questions of how are we going to pay these off? But B, how does that affect me, my family, my kids and grandkids down the line?
Yeah, that's one of the crazier things there too. So taxes only cover 70% of the total expenses at this point. So regardless, even if they raise taxes by $2 trillion, they can't. They're still only breaking even, and they still have to pay this interest on the debt.
Right.
That just means that the 30.
Can you tell me, this is pure, I'm just showing how ignorant I am. If we could talk about real estate, that'd be great. Then I would sound smart.
Of course.
But is any of that floating? Is any of that debt like a floating rate too? Because that's another, or I guess it doesn't even have to be a floating rate. We could be paying the stuff that's at 2-3%, and then having to take out new debt at 5, 6, 7, which is sort of the same thing as it being a floating rate debt. But that's the problem.
If
this stuff keeps going up, and that's why we have to that's why the Fed has to drop rates. A lot of people talk about it like with mortgages. We're like, oh yeah, we need to drop it for mortgages and for the economy and no, we need to drop it so that our interest isn't as high on our debt to other people. That's actually part of the problem.
That's exactly it. You just explained it. I mean, I think you did a great job with explaining it. But over time, as the younger generations have fewer and fewer kids, how's the workforce going to grow? Right? I think that's the issue. But so that goes into real estate. Actually, that goes right into real estate. I've spoken to a lot of real estate investors, and they don't like Bitcoin because Bitcoin doesn't provide cash flow, doesn't provide tax benefits. What are your thoughts on that?
Bitcoin is interesting because of the volatility. I mean, the biggest volatility that we've seen in the real estate sector was obviously 2008, 2009, great financial crisis, formerly called the Great Recession, which I sort of liked more. But we still had, the assets at the end of that. And that was really a blip. You get this 50% decrease. And I think that year was like a 33% decrease in the stock market. But we haven't had as much volatility since then. A lot of that is because, which we don't really love, right? But greater regulations, you have to put more money down. They underwrite you insanely nowadays. I mean, the difference between even when I bought my first house in 2012 to the one I bought 2 months ago, still an astronomical difference. And that's all post great financial crisis. But in Bitcoin, it's like you can have that 50% drop in like a month. I mean, you would know better than I would. I don't keep that much track of it. But I mean, you can have, and I mean, we're talking like it swings. You can see it too. This is another thing that I personally like about real estate is that it's not liquid. So I think that's a feature, not a bug that we don't really know. I can't tell you exactly what my properties are worth. I fill out my net worth sheet and we're like guessing how much the engineering firm's worth. We're kind of guessing how much our properties are worth. We don't know exactly. If you're heavy into stocks or Bitcoin, every minute of every day what your net worth is and what that stuff's worth. And I think that can be a really touchy situation for investors. But at least the stock market closes at 5 and holidays. And Bitcoin, it's all day long. I mean, it can be just flipping and flipping and flipping. And so that's something that that I don't love about Bitcoin is how easy it is to transact, how quick your emotions can be about it. And we're talking 24/7 potential for emotional mistakes. You know what I mean?
Oh yeah, it's actually really scary. Like I'm sharing the chart for anybody who's not watching the screen, but I'm sharing the chart. You can see the trends. You can see the increase and then the drop, the increase, drop, increase, drop, increase.
Yeah.
Drop.
So let's talk about okay, where was the high? What was the most recent high of Bitcoin? 72-ish, 73,
almost 74.
Okay, and that's March. And now what are we at? Where is it at? 63? Okay. Is that what it says?
Yeah. So it was at 73.
That's actually a reasonable thing. But where have we been? Let's see, where's the lowest drop there? Let's see.
So it went to 73 and then it dropped to like 49
in March. So 73 in March and 49 in August. That's a lot. That's a lot of volatility. Yeah. And I could promise you none of my real estate has done that. And my stocks haven't done that much either. Right? Actually, the stocks are up and then like maybe down 5% and then back. I mean, that's the part that it doesn't really scare me personally because I think I'm relatively educated around personal finance, have a good foundation set. I mean, I remember during, March, April 2020, which my stock portfolio looked nothing like it does now. So I don't know, dropped $100,000 maybe, which would certainly be a lot more now. And I remember being like relieved. I remember being like, oh, that's what this feels like. I always knew this was going to happen. I always knew there was some volatility in my stocks. So I think I could personally handle probably some bigger exposure to Bitcoin. But there's a whole generation of people, really. It's pretty generational. It's a lot of young people. It seems to me, just anecdotally, to be a lot of young men, particularly, that they get into this. And I don't know that they have that feeling. I don't know that they have the right expectations. I mean, they think everything goes to the moon. They think measly 10% S&P 500 returns are awful, or the 20% cash on cash returns I get from real estate. They think those are ridiculously low. And so those are some of the problems that I have with Bitcoin as an investment, because I think it can lead to really bad expectations and a lot of emotional decisions that can be made at literally a click of a button. I don't mean to
Did you say
crap all over this, but that's what I think.
No, I completely get where you're coming from. I mean, I don't blame you. I thought exactly the same thing. I think because you're a stock investor, because you kind of understand the volatility, I think it'll be easier for you to wrap your head around why the volatility is there, right? And I mean, the way that I see it is this is a brand new asset, right? I mean, if you think about it, 1% of the world owns it. And then out of that 1%, probably another 1% to maybe 10% truly understands it,
Right. And it's so
right?
young. I mean, when did
Exactly.
2009? Was it 2009? I don't.
2009.
Yeah. I mean, that's recent. I
Yeah.
mean, if you think
So,
about, think about real estate. Think about, I don't
yeah,
know, how old is the U.S. stock market? 1800s,
like 1800, something like
something
that.
like that. That's, I mean,
200 years.
Bitcoin is so much younger than those things. So
Yeah.
yeah, that's a good point. And then that's as more as more money flows into anything, then individual transactions, even a lot of them, cannot move the needle as much as you can move it with Bitcoin right now.
Yeah. That's exactly what it is. I mean, the way that I think of it, the people who don't understand it are the one, let's say the 90% who own it just out of sheer luck. Maybe they got in 2010, they started mining Bitcoin. They got so rich that they didn't put in the time to understand what it is. They just spent their time educating them or just entertaining themselves. And now, let's say Bitcoin's price is at 70,000 and they think it's going to come back down to zero. So they're like, okay, I'm going to get out. The Ponzi scheme is done. It's over. I'm going to sell everything. That's where the volatility comes from. And then
Right.
on top of that, we can see right here. So this is where I think the Fed started increasing rates. November
Mm-hmm.
2021. I think they hinted that they're going to increase rates.
Well, interesting that there's any correlation there, right?
The reason why there's a correlation is because people are so at the top here. Let's say when people buy here, so right now, I think the point we're at in the market is that we are at the point where retail investors are being shaken out. A lot of retail investors don't want to deal with the sideways movement. So we can see here, check this out right here, exactly the same thing. So moving sideways,
Yeah. So
and then it
for
just goes
audio, for people
crazy.
on audio, we're talking 2019. It looks pretty stable.
Yes,
And then,
exactly.
so what was the 20 after post COVID, or is that during COVID that it
Yeah,
started going up?
it was during COVID. So what happened during COVID is the Federal Reserve essentially brought interest rates to zero,
Right.
right? So that just made it easier and easier for people to buy Bitcoin with
Well, and they had to
borrowed
do
money.
something. I mean,
Exactly.
you certainly couldn't be in bonds back then.
That's exactly what it is. So what
Right.
happened here was a lot of people saw, oh, Bitcoin's going up, so I'm gonna put in as much money as I can, and then let's say they bought here. They didn't put in the time to understand it. They just got that instant dopamine hit
Yep.
where they see the price going up and they're like, "Oh, I'm a genius. I'm just going to buy as much of it as I can and I'm going to borrow against my house and I'm going to get a second mortgage and I'm going to do this. I'm going to borrow on a credit card to buy it. I'm just going to take as many loans as I can. I'm going to buy Bitcoin. I'm going to sell at the top."
I saw those stories. Yeah.
Right? And then but then that's what leads to these massive crazy pumps. But then what happens is some of the people who buy here, maybe they saw the price dropping and maybe they actually understand what the Bitcoin market is, what Bitcoin is, what how prices are determined, and they're like, "Oh, this is interesting. Maybe I'll dive a little deeper." And then they hold on to it. And then they hold and they hold and they just keep learning, keep figuring it out. And then they get to this point. It's exactly like real estate, right? I think what Bitcoin does is the volatility is the cycles are shortened essentially. Every 4 years, you're going to see a higher high, a higher low. That's pretty much it. And then over time, like even if you look at the cycles here, it's actually crazy how accurate that is. And the reason for that, do you know how the supply and all that stuff works?
Well, yeah, that's when it halves, right?
Yeah, so
That's the
that's exactly what
fascinating
it is.
part of Bitcoin, by the way. And that's why I think of all the crypto, Bitcoin is actually the most interesting and the most fascinating, is
Yes.
because of how however the supply is predetermined, which is certainly much better than the Federal Reserve printing
Yeah.
money. So there's that portion of it. What I also love about Bitcoin is that we don't know who the founder is. I think that is really cool. And I almost think it wouldn't be able to be the premier cryptocurrency if we knew who Satoshi
Yeah.
Nakamoto is. I think
Absolutely.
those two things are truly a big deal and what set it apart from all the others.
I think one of the things that makes it so important that nobody knows who Satoshi Nakamoto is that you don't know what his his preconceived biases are. You can't judge him based on something that you have no idea about. Because if you think about it, there's people saying, "Oh, he's a Russian spy." people saying he's Chinese, people saying he's Japanese, people saying he's part of the NSA.
Well, it may
Nobody
not
has any
even
idea,
be a male. It may not
right?
even be one person.
Exactly.
I
Yeah,
I tend to think it's not one person, but
yeah.
just because of
They
the
thought of
complexity
everything.
of it, yes. And I think even in the early stages of the blockchain, I just think you would have needed at least a group of people to be operating it. So I tend to
Yeah,
think that's just my conspiracy theory is that it's more than one person. I guess my other side of it is like maybe he's dead because the thing that goes against it being being multiple people is that their bitcoins don't move, which
yeah.
is a very strange part of everything too.
And then have you looked at mempool by any chance? Do you know what
Mm-mm,
mempool
never,
is?
no, never heard of it.
Okay, I'm going to show you something. I think this is really what blew my mind when before this I started learning about Bitcoin. I read the Bitcoin Standard and all that stuff. I was left with a lot more questions than I had answered, I guess, because it just goes so deep, right? So what mempool is, this kind of like gave me that picture where it showed me, okay, this thing actually makes a lot of sense. It's it's based in reality essentially. Okay, so a mempool is it's the entire record of transactions. If
So these
you
are
go on this
these are
website,
these are what blocks or nodes
these are
or
blocks.
okay.
And then every block is numbered. You can see here there's a number for each block. You can see if you click into one of these blocks, you can actually see every single transaction that's happened.
That's cool.
So I think the reason why I'm showing you this is because it feels like this solves accounting, right? It solves the ownership of assets. It solves government printing of money. It solves because nobody can print any money without everybody seeing it. So you can see here on this blockchain thing, on this mempool, you can see newly generated coins. We can see exactly how many coins were generated. So each Bitcoin can be split into 100 million Satoshis. Not sure if you knew about that part, but
Mm-hmm.
essentially
Yeah.
you can see every single transaction here, right? And it this is what showed me that okay, this thing actually makes sense. And then
My
something
question
cool,
about this though
yeah, of
is,
course.
I mean, we have like Visa, MasterCard. They process a ton of transactions and they use a lot of electricity to do it too, which I think sometimes people like when people that crap on like crypto, they're like, oh, they're just using electricity for it. I'm like, listen, you think Visa and MasterCard aren't using electricity to process this? You guys are insane. But
Yeah,
my understanding from my very menial research over the years is you could not code every transaction. If
no,
for every person that goes into the goes to a gas station, gets gas, gets packed cigarettes, gets gum, you can't actually code all of those onto the blockchain, which originally I was under the impression it could do that. But it just my understanding is there's not enough processing power or enough speed maybe, or maybe the work is just too hard now. I don't know, but can you talk to me a little bit, explain that to me a little bit?
yeah, absolutely. So, okay, I actually I want to. That's a really good question because I think that shows a lot more people because people have been complaining that okay, this doesn't scale, it doesn't increase the number of transactions. You can only do, let's say here, you can actually we can see that right here, 2,471 transactions on this block. So every second, there's apparently something like 7 transactions per second. I haven't done the calculations, but it's 7 transactions per second. But these transactions on this block, we can when we look at this blockchain here, these are final settlement,
Right.
right? So it's like if I gave you a bar of gold, that's what the network is doing. It's giving you final settlement. Visa, MasterCard, they don't do that,
Right.
right? So with Visa and MasterCard, you're let's say you're a merchant. Let's say you sell a course or you sell a book, and Visa and MasterCard are the ones processing the transaction. They can cancel the transaction.
Right.
I
No, I
think
get that.
I think they
I believe me,
I
I've
think I've
had that. You think I haven't had a guest come stay in one of my short-term rentals and not do a chargeback? Heck yes, I have.
oh, of course. Of course, that's the problem, right? If if they do it through Visa and Mastercard, they're not getting final settlement. So on Bitcoin, this base layer is final settlement. So if I were to send you 1,000 Bitcoin by accident, and I send it to your address, I can't get it back unless I talk to you. I have to communicate with you. I have to get the Bitcoin back from you, and if we're on good terms, maybe you'll send it back to me,
Oh, I
right?
would
But I
send.
can't force you.
I'm the type of person where I would totally send any. I would send anything back that I got by accident because I'd be.
Of
I don't
course,
know. I'm a little bit of a karma believer. I think so. I would,
that's it.
but that's a good thing and a bad
Yeah,
thing. Okay, because
of
let's
course.
talk. Let's talk about the Airbnb guest that comes and stays in my place. This is what happened. She came and stayed in my place. The one bedroom was upstairs, one bedroom was downstairs. The upstairs AC went out. So we put the person who was supposed to stay upstairs in the backyard in a unit where the AC was working. So
Oh,
it's not
yes.
an ideal
Okay.
situation, but it's 4th of July. Couldn't get anybody to fix the AC, right? She gets upset. She leaves. They sign a renter's agreement. It says mechanical issues for any systems are not a cause for a refund. She has signed it. She does her charge back, whatever, right? And she wins after the 60 days and whatever. She wins. She gets her money back. And basically, I had her dead to rights. First of all, from a moral perspective, I felt like I remedied the situation. There were 2 guests. Just one was in a unit in the backyard while we were waiting till the 5th of July to get the AC fixed, right? But so I feel like she was in the wrong there. But what if if she had paid me in crypto, I would have had it. There would have been nothing she could do. But look at the reverse. What if she pays me in crypto? She gets there. The AC is not working at all. I don't have anything I can do to fix it. What recourse does she then have? Or let's say even worse, she gets there and the listing's fake. Listing doesn't even exist. That happens sometimes on Airbnb. Then she has no recourse. So I see what you're saying. And believe me, we just bought our primary home, and we had, I can't remember what our cash to close was, 200 something thousand. And we can only send $100,000 wires at a time unless we go to the bank. And so I've got to take my happy self to the bank. Like, that's annoying. Like, don't get me wrong.
Yeah.
But my point is there's pros and cons to that, to having like no third party in between.
I mean, you could still have, let's say, lawyers. You could have, there are services that actually do this already. They do sell and buy real estate with Bitcoin, but what they do is they have an escrow service in the middle where they just hold on to the Bitcoin. Let's say, for example, if you were to go through Airbnb, this person's going to pay Airbnb through some kind of escrow service. And then once everything is good, once everything's dealt with, Airbnb would move the money to you. I mean, I don't know what the procedures will be, but I'm thinking that's essentially what it'll be. Maybe they'll put some Bitcoin on hold. Maybe it's like putting a hold on a credit card, essentially. Yeah. But then there's also Visa and MasterCard who are starting to participate in this, which is, to me, crazy because they're supposed to be working with fiat, right? And they're essentially giving you a bridge to spend. Let's say you save a ton of Bitcoin. Let's say you were in since 2005, or sorry, not 2015, and you've just been accumulating, and your Bitcoin has gone up 100x or 50x or whatever the increase is. You can just spend your Bitcoin now. You don't even have to think about it, right? And I think that's what makes things pretty easy. But so that was what the layers thing was. So you were saying the base layer, they can't do as many transactions, and it gives you that security as a merchant. But you're only going to use that. Let's say if you were to buy a car. Let's say you were to buy a car and you have and you have to pay them, let's say, 30 grand. You're going to give them the Bitcoin. You're going to get it checked from your mechanic. You're going to get everything done. You put it in escrow, and then once the transaction is good, you're good to go. I don't exactly know what the process will be. I mean, over time, we'll discover new things. I'm pretty sure pretty much every bank is going to play a part in this. They're gonna offer the escrow service, a service in the middle. But I mean, I think over time we're just going to build better ways to transact, right? And then even today, have you heard of the Lightning Network?
Yes, but just heard of it. I don't know anything about it.
Okay. So essentially what you can do is you can create a layer on top of the base layer of Bitcoin. It's like Visa. Basically, anybody can start a Visa, right? There's a wallet called Wallet of Satoshi where they have a Lightning layer on top of Bitcoin, and then they have everything self-custodied. So if you trust them, you can use them. And then if you need to send transactions anywhere else, you can do that, even if they're tiny, tiny transactions. Like there's there's this app called Fountain, where if you listen to podcasts, they give you little bits of Bitcoin. And in my Lightning wallet, I'm getting 10, 15, 20 Satoshis a day. And it's worth next to nothing right now, but eventually, I mean, it'll probably be worth a lot. And maybe I'll be able to use that Bitcoin to transact more and more. But then with Lightning, you can do 1 million transactions a second. Right? So I think the layers
they just clear them. They just clear them at some point.
Exactly. That's exactly what it is.
Yeah, that's how it has to be. Yeah.
Yeah, that's I think that's what's going to happen. I think if you have, let's say, 1 million satoshis, do you know about the fractions of Bitcoin?
I just know about Satoshis.
Oh, okay. So one Bitcoin can be split into 100 million satoshis. So let's say you have 1 million satoshis and it's on Lightning, and you don't want to keep it on Lightning anymore. You just move it to your wallet, and you have full self custody of it. I think over time it'll just get easier. That's how I see it. I don't know. Maybe I'm wrong. Maybe some other cryptocurrency is going to be the one that's going to have to deal with layer two transactions. Maybe you send your Bitcoin to Cardano and Cardano does all this stuff.
Right.
I don't know about that, but
Right.
the way that I see it, Bitcoin is the best layer. It's the best base layer, settlement layer in the world, and really nothing can compete.
I tend to agree. The thing about Bitcoin, I guess maybe all cryptos, but definitely Bitcoin is it an investment? Is it a currency? Is it a financial system? When it comes to real estate, I know what I have. And I
Yeah.
can super look at it, right? I know there's my apartment building. I own that.
Hmm.
Or when you have stock, at the end of the day, you have pieces of companies. When it comes to Bitcoin, what do you have? What's
You
under
have
there?
money essentially.
Yeah.
You have it's like another replacement for gold or another replacement for fiat, right? Because we use
So
fiat
it's like
to
a commodity.
essentially, yes, exactly. The real estate has now turned it. I mean, real estate is a commodity, but people use it as a business now. So it's
Right.
become in a way, real estate has become a security, right? Because you're essentially trying to make a profit from the efforts of others using like the Howey test. Same thing with stocks. Stocks are, of course, securities. You're using the efforts of, like, say, executives, of employees. I think the issue with, let's say, stocks is that you don't get to take self custody. Let's say with your brokerage account, you're relying on your bank to not make mistakes, to not lose their records, and to make sure that the custodian doesn't mess up. Um, the U.S. government doesn't confiscate your stocks for whatever reason. I think there are some. Of course, there's upsides to that because they're companies. They're producing goods and
Hmm.
services, right? And they have this moat. They have this ability to produce goods and services better than everybody else. Like Apple. Apple has this ability to produce their phones in a way that gives their users, in a way, a sense of community, right? They can use everything with the same, um, I guess, the same ecosystem, and then they can work with. I don't even have an iPhone. I'm saying this, but people who are iPhone people, they always say iPhone is the best, right? And then they have that ability. They built that reputation over time. But then let's say Apple does something stupid where they completely ruin their reputation, and overnight you can't use Apple as a savings vehicle. You use it as an investment because overnight it could go to zero because
Right.
of the decisions of someone else. On Bitcoin, there is nobody at the top. There's nobody making decisions. There's no product being sold. Like, I don't have to create an Apple phone and sell it to someone in order to, or sorry, a Bitcoin phone and sell it to someone in order to make sure that the Bitcoin network keeps running, right?
Right.
The, I think that's the main difference. I get what you're saying with real estate as well. Real estate, you get that real thing. The issue with the problem that I personally see with real estate, I don't know, you tell me if I'm right or wrong on this, but problem that I see is that real estate can be built at will, as long as we have the resources, as long as we have the land, we have the energy, the materials to build it, we can build more real estate. And if more properties flood the market, let's say real estate prices go up so much that developers are incentivized to build higher and higher buildings, and they can house more and more people. And then suddenly, I've heard some pretty bad things in the U.S. about people that are coming in, not in a racist way or anything, but not in anything like that. But I've heard some bad things in the U.S. I've heard some really bad things in Canada as well. More and more people are coming in. They're not assimilating, and they're essentially making certain areas not as ideal. And how do you know that that's not going to happen in your area? Let's say you own a bunch of real estate, and your building just loses all of its features. The people living there don't have the same standard of living, And that could be an issue, right? So when you buy these assets, let's say you buy real estate, you're buying something that gives you a little bit of risk. But the thing is with Bitcoin, that can't happen. You can't change Bitcoin. You can't increase the supply. The supply is fixed forever. And
Well,
what are your thoughts on that?
for some cryptos, they do go to zero and they do stop. I mean, that would be
Of course.
my neighborhoods that I'm invested in de-gentrify instead of gentrify. That
Yes.
would be that example, right? Well, you can invest in REITs, you can invest in syndications, you can buy properties in different areas, different states. You can buy different kinds of properties if you want. Now, there's an argument to be made for both. I like short-term rentals, and so I primarily have short-term rentals. I like the state of Florida. By why I always wonder when there's a hurricane coming why I do, right? But I do. But if I really wanted to diversify more, I easily could. I could get a 16-unit long-term rental apartment building in Valdosta. I could grab a quad that I can short-term rent in Huntsville. I could, diversify that way. I can have long-term rentals, I can short-term rentals, I could go single-family homes. And that's the answer to the supply and demand question that you're talking about. And it's a good one. But at the end of the day, I mean, this is what's so hard about building a property. You have the value of the land, and then you have the cost to build the building. The house I just bought, our land is worth about $500,000, and it would cost about $1 million to build this home. We paid $1 million for the whole thing.
Wow.
It's almost like the Warren Buffett way of thinking, right? Like, this is how he used to buy companies. It was like on like asset value, right? If you add up the land and what it would take to build this place, and you pay less, then from an economics perspective, it should always at least hold that value. That's one way to think about it. The other side is, we could build more. There's more and more land, but there's only so much land where people want to live. Most people want to be within 2 hours of a major airport, for example. And like you said, then they can go up. But most Americans want to live in single family homes. I think we will see we've seen this in other countries. We've certainly seen it in Canada, where I think they're going more and more to townhomes. I think we may see more and more of that. But still, a single family home, I mean, you can only do so much. And with the way that zoning laws are, they can't buy this lot across the street from my house and build an apartment building there. You can't, because of the zoning laws. And so there are still some constraints on the supply and demand. But my answer to all of that is that's why we have my husband's engineering firm. That's why we have stocks. That's why we have real estate. That's why we have diversified quite a bit. So I have long-term rentals and short-term rentals, and some on the water, some not on the water, and single family duplex apartment building. We have some different things to that way. If some Nicaraguans come and infiltrate one area, and that becomes Nicaragua light, and then my building goes from being worth $1 million to being worth 500,000. Overall, the impact on my overall net worth is stymied a little bit by the diversification that I have. But I just don't think in the United States, I don't think we will ever have enough single family homes for the people that want them. I think we can have housing for people, but I don't think we'll get to the point where we have enough affordable single family homes for people to live in.
The only so I get what you're saying. I completely get it. People do want to be independent. They want to have their own homes. They want to have their own area. The only issue is that I don't know if rational actors will think of it that way. Let's say the price of a single family home goes to $20 million, and all you're earning is $100,000 a year. You're never going to be able to get a single family home, right? So I get what you're saying. Completely valid. I mean, everybody wants I want a single family home. But the thing is that at a point, that dream just comes to an end.
Mm-hmm. Right? But that's the argument for owning a single family home now.
Yeah. Of course. But I mean, the way that I see it, if let's say you own real estate as an investment, you have them as short-term investments. I know a lot of people, they own real estate for long-term investments. They buy a house, they rent it out for as long as they can, they hold on to it. To me, that's a business.
Mm-hmm.
But a lot of people see their house as a savings tool. They see their house as a savings account, right? Okay, so let me ask you a question. what do you think your annual returns on your real estate portfolio were over the last 5 years? If you don't mind me asking.
I mean, it's complicated because we don't know what everything is exactly worth right now from the appreciation perspective. And you've got the
Right.
cash flow perspective, the tax benefits perspective, and the loan pay down. It's got to be 25% at least.
25% a year.
I would
But
say it has to be. Yeah.
but what if, let's say, what if there was, okay, so just a hypothetical, what if there was a way for you to, because I mean, of course, you know where I'm going here. I'm going into Bitcoin. So what if there was a way for you to not have to deal with tenants, to not have to deal with maintenance, to not have to deal with repairs, and you could literally do whatever you wanted, and you could, if you wanted to, you can go to a beach for a year, just live there, and you don't have to worry about tenants burning down your house or doing something that just makes your house worth a lot less than it is right now, and you don't have to deal with insurance, you don't have to deal with lawyers, you don't have to deal with real estate attorneys, all that stuff. Would you take that opportunity, especially if you get a higher return?
Well, I'd be interested to see what the return on Bitcoin has been in the last 5 years. But you can get property managers, you can make it pretty passive, you can systematize like crazy, and we have a lot of stocks for that reason. I mean, we just sold one of our investment properties, and we put the money into the stock market to make our lives more passive. Now, those returns are average 10% per year. They're not 25%. I mean, you can always go into stocks. You can always reallocate into stocks or even bonds if you want to go like super conservative. You can do that too.
1 second.
But I think I think it's okay for, and I believe I've said this before on Twitter or something, that I think having 1% to 5% of your portfolio in crypto is fine. And that's even relatively, I think, conservative. And I think that's okay. It's sort of how I feel about picking individual stocks too. I think most of your stock holdings should be, broad-based index funds, but I think you can have some individual stocks. I believe in diversification, but we all know the deal, right? Bezos didn't diversify, right? I mean, he was all in on Amazon until recently. I mean, I've seen his real estate transactions and stuff, but I mean, to get super, super wealthy, most people don't diversify. They go all in on some asset that they know a lot about, and they hit it big, and then maybe they diversify later. So I understand that argument. But I am just a tried and true proponent of some diversification, because if I had all of my net worth in short-term rentals on the west coast of Florida, the way insurance is and the way these hurricanes have been, that would have been very detrimental the last couple of years compared to how it's been. Well, yeah, it would be hard, but that's what I'm saying. Whereas now, only one of my buildings is in the way of this storm. Luckily, it's been hit by, that same town has been hit by storms the last 2 years, and nothing happened to my building. So there's that. But imagine if I had everything there. And the property I just sold was on the water. I think it was at 7 feet. And the last storm surge we got put it at 6. And I don't own that anymore. And I'm like, if that floods this week, got out of that one. And that's the money that's in the stock market.
Last storm? The last storm was 7 feet?
Idalia was. That was last year.
Okay, 7 feet. Wow, that would
it was 6
destroy
feet.
Everything.
It was 6 feet. Yeah, well, Idalia and then Debbie both hit where my apartment building is, and they were 7 feet and 5 feet, and they're projected at 9 for this storm. And Debbie was just 2 months ago. So that's pretty devastating. I mean, my building should be fine. The AccuWeather people are booked there, they are every storm. That's where they like to hang out, I guess, which is fine. And I'm very flattered that the AccuWeather people like my building, because it must be pretty safe if they keep booking it. But but it's not good for my business, because you're right, real estate's a business. It's not good for my business if the downtown area gets hammered by its third storm in 2 years, right? So, but I only have one building there. My other buildings are not should not be affected by the storm. They're not. None of it's in a flood zone or anything, But
real estate,
but if that particular island, let's say it didn't have these storms, let's say it just starts growing. Let's say Bill Gates takes all of his money and invests it in this island, and it just goes to the moon. That would have been
Yeah.
way better if all of my investments were there, if
Yeah.
all of my real estate was there, if I didn't even have any stocks and all of it was just real estate there. But there's a potential downside for that. And I do feel
Of
like
course.
the Bitcoin crowd, the crypto crowd is very put all your money on that island, you know?
I don't even think it's all your money. I mean, you're already diversified. You already have, let's say, 1 to 5%, however much you have. You have a certain amount set aside in Bitcoin, and I think you're great for doing that. You're good. I'll show you some numbers after, but let me just show you how Bitcoin's returns have been. We were talking about that before. So over the last 5 years, 1 second here. Oh, where is it? Bitcoin to USD. There you go. Okay, so over the last 5 years, Bitcoin's gone up 672%.
Okay.
I think on an annual basis, this is something like 70, 80%, like, or something like that, which to me is just insane. And you're not doing anything.
Right. No, I hear you. But there's
Right?
moments in there where it's been freaking horrible. And you know what?
Oh, yeah.
People do something. They do take action with that liquidity problem.
sell.
Like I said, they sell.
Yeah.
And they get
like
freaked
this
out.
point right here,
Yeah.
down
Oh, yeah.
74%.
Yeah, that
Right?
would
But
that would hurt.
yeah. Yeah. That's the volatility though, right? That once
Yeah.
you wrap your head around why this thing is volatile, it doesn't hurt as much anymore. Like for me, for example.
Also, with real estate, I mean, it's leveraged
Yes.
returns, which is a big deal.
I think to me, I think that's more of a problem. I don't personally like the leverage. I mean, it's just adding more risk, right? Because
I love
you
it.
could, of course.
I would sleep worse if I didn't have $2 million worth of loans.
If I think you would see, the thing is that when you own Bitcoin, you don't need to take on leverage, right? Because your returns will be higher. Let me show you. I actually have a spreadsheet that I made some numbers on. But why do you like leverage so much?
Because why would I not borrow somebody else's money, invest it, and get all of the returns for myself?
Right. Okay.
Let's look at it this way. Let's look at it this way. I could have paid $1 million cash for my house. Instead, I put $250 down, and I took out a $750,000 loan. What if I took that $750,000 loan and I put it in Bitcoin? You wouldn't be telling me that's dumb.
I mean, I actually personally don't like that idea. The reason why I say that is because
so for all we know, cash instead of having that $750,000 in the stock market.
For real estate and stocks, you're good. You're fine. I think what you did was okay. I don't have a problem with what you're saying. I personally just don't like taking debt to buy Bitcoin. Well, the reason why I say that is because you don't know how low it can go. Let's say some whale starts dumping.
For the record, I agree with you.
Right. Of course. No, we have to talk about the opposite side, obviously.
But if you wouldn't take a $750,000 loan on your house instead of paying cash, if you wouldn't put it in Bitcoin, what does that say about your confidence of a 672% return over the next 5 years? You're not that confident, because if you were, you would do it. You would do it every time, no matter what.
No, but it's not about that. The reason why I wouldn't take that loan is because, for all I know, Bitcoin could drop over the next year. Mm-hmm. And let's say let's say Satoshi Nakamoto owns 1 million coins and dumps all of his coins.
Sure. Yeah, of course.
Mm-hmm. Why would I want to borrow?
That's the same reason I'm in real estate, not Bitcoin.
Right.
Is for that's the exact answer.